How does one read the markets? If you were to look at the charts right now, they're all in the red, but they're all marginally in the red. Lots of talk about choppiness and volatility reigning supreme.
Yeah, so we have good support coming in close to 23.14, 23.50, in that range. And I think somewhere the market most likely will take that support and start heading higher. So it's going to take a little bit of patience. What is important is to see what has changed globally in the last 1 week, because most world markets have actually recovered from the lows that they were actually seeing in late April and early May. Our market too did that. It's just pulling back. So for example, we had hit a low of 21,777, which is below the 22,000 mark, and then we rebounded all the way to 22,794. So that's almost a 1,000-point jump we'd seen in a very short period of time, and now we sort of retraced say 50% of that. So I think it's a good retracement. It's a good build up to what comes next, which is as we get closer to the election. I think there will be what we usually see is an election rally, and the environment has actually gotten better on the global markets place because especially after last week's Federal Reserve meeting that sets the stage for easy liquidity, that I think we have a setup for a market advance. So I think this pullback is just temporary, but should get bought into, and we should be heading higher soon.
Okay, pullback is temporary. We're talking about the global factors at play over here. Wall Street has had 3 sessions up and up in the green. Lots of expectations of a possible rate cut after the softer than expected US jobs data. Except for the US Federal Reserve, everybody else seems to be talking of a rate cut on Wall Street. Tell us, from the way, and you're seeing that enthusiasm on Wall Street rubbing off on Asian markets as well.
Yeah, see, this talk about rate cuts has been there since the start of the year, because the Fed itself has given that as an outlook, right? What they said is we will start rate cuts in 2024. So that sort of gave a timeline that, it's going to happen for sure. The only thing, the betting game has shifted between whether it's 6, whether it's 5, whether it's 3 and 2. But so what the Fed has done in this particular meeting, which is making people confident of it, is that while they were not able to cut rates immediately, they have reversed the quantitative tightening program. So that is a big step in a direction telling you that, see, we are serious about getting this done. But we can't do the rate thing right now as bond yields have risen in the last quarter. But let us at least reverse quantitative tightening, because that is sort of creating a lot of pressure on the bond market, right? So somewhere they need to start buying, supporting those bonds. One of the ways they are doing that is the Treasury is doing a bond buyback up to $2 billion a week, starting from somewhere in later in June. All the way into July, and so that will be a significant liquidity provider. So basically, what we are saying in short is liquidity conditions have eased, and that is good. That is why you're seeing European markets pick up, US markets pick up. Indian markets, like I said, after a 1,000-point pop, is just giving back some of those gains, but should eventually align with what is happening globally on the rate front.
All right, so that's the overall view. But how do you read what's happening with commodities, namely gold and crude?
No, so here's the direct rub off. Like, moment we talk of an easy monetary policy from the US side, we talk of a falling dollar. And when the dollar starts falling, you find commodity prices going up. So part of the commodity rally is, I think, an advanced bet on the idea that rate cuts are coming. So people started to bet on that, I think, from Feb or March itself, and you started this commodity rally where gold and silver have actually ended up hitting new highs. I think in the last 2 days they've pulled back and taken support at some very interesting levels. For example, gold at around 2270, and silver at around 26.20. I think those were good supports from where they've bounced back. Possibly the gold and silver rally should resume. We should see them head higher. Or alternately, you see some more consolidation. You can say, okay, we've had a good run up, we will consolidate some more. But medium to longer term, over a 3-month period, I do think commodity prices are going to be higher. In the very short term, it's possible, some things, for example, copper has gone up a lot. It's moved, significantly in one direction, all the way from 3.6 to 4.6. That's almost a point. So you can't rule out that, copper will consolidate, maybe even pull back to a 4.3 at some point of time. But eventually head higher. So it's a good time to get a pullback. But some of them, like oil, have already seen a pullback, right? So oil, we've seen a pretty steep cut. I don't think oil should fall any further below, $77. Most probably the recent low we made around 77.90, 77.80 should be a bottom. Possibly oil prices also start rising from here. So that is something we'll watch out for.
Okay, fair enough. Would it be then safe to assume that, going forward, at least in the near term, for the next few weeks, it's going to be stock-specific action on India's markets?
So we've always seen a lot of rotation. I think that's been part of the play over the last 3 months. We were anticipating some kind of correction, but what ended up happening is a correction in specific stocks at specific points of time. So, for example, we were discussing metals. Can we expect the metal sector to correct because they've already moved up? Maybe. But on the other hand, because banking has not performed and they've been under pressure, it's a good time to expect that banking stocks pick up. So that kind of rotation is going to happen. You're seeing that even in FMCG, for example, a sector which was down for the entire quarter is actually seeing some positive momentum, seeing that in chemicals and so on. So I think there will be rotation. PSU stocks have had a one-way run. They may still participate, but possibly the ones that have run up one way see a pullback. The ones which have been down bounce back, and that rotation can make you feel that it's a stock-specific game. But it's essentially sector rotation that has become part and parcel of our market behavior, I think, over the last couple of years.
Okay, you're talking about sector. I'm going to pick up on one of the sectors that you're talking about. That's FMCG. Godrej Consumer Products, a player in the FMCG space, came out with results, not great results, but the stock continuing to do very well.
Yeah, it's well. I don't really track the stock in particular, but what I can see is that it has gone past the previous high, so that is interesting, which was at around 1320. That can set the stage for a fresh move higher. So we will see whether it can hold above 1320 or not.
Okay, let me pick up another sector that I want to talk about, and that's the pharma sector, the pharma space over there. You have a big results that's expected from Dr. Reddy's coming in for the pharma space. Talk to us about Dr. Reddy's as well as and of course the pharma space. Amit, you have the numbers on Dr. Reddy's.
Yeah, the pharma giant Dr. Reddy's is due to announce their results today. Their net profits is expected, according to market analysts, to rise as much as 35%, revenues to rise almost 14% year on year. Now, the pharmaceutical industry, I'll come to that first. It's around 50 billion right now, due to cross 65 billion this year, projected to cross 130 billion by the year 2030. Now, India is a major exporter of pharmaceuticals, exporting to over 200 countries. But what we have seen with Dr. Reddy's is, and the pharma space, is they have had pricing pressure when it comes to the US market, which is one of the biggest market. But the domestic sales have more than made up for it. Rohit, will it be this way, that it will be the domestic market that will be shoring up the pharma sector in the near term, given the geopolitics that is happening around the globe?
No, I think it's going to be a mix of both. I think we shouldn't completely write off, the demand for generics and, the global demand for cheaper medicines, which was sort of the theme. There are companies operating in that space, and I don't think that will go away. But the domestic market also is a good place. I mean, if we can see a growth in, say, the hospital sector, then why wouldn't it be there in domestic pharmaceuticals as well? So I think both are in interesting place. Both participants are likely to gain. What is more important is from a valuation perspective, the pharma sector, because it's been through multiple corrections. Initially a 4-year correction all the way into the lows of 2020, and then another 1-year correction between 21-22. The valuations are actually much lower than some of the other growth segments. So even if you compare it to FMCG, I would find pharma far more attractive, because they are at the bottom end of the valuations compared to the FMCG giants. And so in that sense, it's a very, very interesting place to be. In fact, I wrote a post, and not really making a recommendation here, but I wrote a post on Dr. Reddy's yesterday, simply plotting the EV by EBITDA on a 15-year basis, and you actually find it closer to less than -1 standard deviation in terms of its valuation range. So that is sort of at the bottom end of its 10-year valuation range, even though prices are moving up. So that's just to give you a sense of where valuations are for pharma stocks, because they've sort of been ignored for a while, and so that creates a very good trade.
Bear in mind, Dr. Reddy's is expected to come out with its results today. On that note, Amit, lots to talk about the pharma space.
Yeah, pharmaceuticals, and Rohit, I'll come to you on this also. Pharmaceuticals has been one of the focus sectors of the government, given the PLI schemes and the amount of incentives they've given towards the transfer of APIs to India, primarily from China. Nifty Pharma over the last 1 year has grown around 50%. Like you said, do you see a big rally round the corner post-elections with the new budget coming in?
Put it this way, the pharma sector has already been undergoing a rally, and most probably that rally would continue. That is, I think, the way to look at it. So it's not likely to stop right here, right away. Some of these stocks, for example, if I think of Sun Pharma, it has actually been through a correction from 1600 down to 1400, which then puts it at, somewhere at the monthly support levels and so on. So there may be some rotation within the pharma stocks also, but overall, I think if I look at the pharma index, we should look for a continuation of the current move or the current pace of advance even into 2024, 2025.
Okay. That's as far as the pharma space is concerned. We're looking at all the gainers and losers, losing sectors in trade this morning. Nifty Bank continuing to be in the red, IT in the red, Nifty Auto in the red, Metal Pack in the red, private banks in the red, media in the red, pharma too marginally in the red. I want to pick your brain specifically on the Nifty banking pack. The PSU banking pack strangely is flat to in the green at this stage. How do you see the banking pack trading going forward?
No, I think banks are due to make a comeback. In fact, PSU banks have been the only ones running. So when I say make a comeback, I'm actually referring to the non-PSU banks which have not been participating in a big way. When we look at, say, the Bank Nifty, for example, it has been zigzagging in a range for more than a year. I think that phase has sort of come to an end. We are at the point where you will see participation coming back into banking stocks, the way you're actually seeing bad news get discounted. Like in the last 2 days, you can actually see a Kotak Bank trying to rebound, which is interesting. You're also seeing something similar, a lot of bad news around HDFC Bank, which are, I think, the two weakest spots inside the private banking space, which has sort of, I think, now absorbed a lot of bad news. So usually when a lot of bad news has already come in, that's when we can sort of start saying that, okay, now have you really discounted a lot of the bad news? So I think the private banks start getting attention again. Even the NBFCs, which were probably under some stress because of various announcements coming out of RBI, I think that also sort of gets discounted. So it's time to actually look at financials outside PSU banks also. That's where I think the surprises on the upside could actually show up.
All right. So as far as the banking pack is concerned, any other sector that is grabbing your attention at this stage, Rohit?
No, I think we've sort of spotted the places that need to be looked at. Others which were actually doing well, I think autos are an interesting one because even though the auto index may have looked like it's doing well, we didn't have broad participation. For example, you've just seen Ashok Leyland suddenly break out to a new all-time high. Things like that, actually good signals of longer term trends continuing and emerging more strongly in favor of certain stocks that were not participating earlier. So I think autos being interest rate sensitive, since we actually spoke about the rate cycle at the beginning, interest rate sensitive sectors that benefit from lower rates would actually get attention, is what I think.
All right, interest rate sensitive sectors. And how do you see rates in India panning out? It's not the same case. There's going to be a rate cut in the US. We're going to see a corresponding rate cut in India. Indian central bank being very clear about managing inflation. And in that sense, how is the Indian market perceiving the rates in India?
So Indian bond yields were under pressure, but I think RBI has managed pretty well that they don't go above 7.2%. So if you actually look at the entire pattern of the 10-year GSEC bond yield from 2022 to date, they've actually made lower tops. Like we were at 7.6% in June of 22, then we reached 7.5, then 7.47, then more recently 7.35 in October of last year. And now in the last month, we went up only to 7.26. So we've been making consistently lower highs, but not breaking out on the upside. So that is interesting. I was actually scared if we break out on the upside, that would have posed a risk to, in terms of interest rates in India. Now what we need to watch out for is, do yields actually drop below 7%? Because once they do, then we can persistently go into a lower interest rate environment in India as well. So I think that is what will be the trigger. Once we see rates on the 10-year fall below 7%, you will see a lot of money get into interest rate sensitives, which I was just speaking about.
Rohit, there was one sector that I wanted to ask you on. FMCG has been a laggard. Now we are expecting a good monsoon this year. What is your view on this sector? A lot has been written and said about, but it has been a laggard.
Yeah, so it's sold off. It's gotten very oversold near term, so there is a buying opportunity. But like I said, if I have to choose between defensive sectors and I put valuation as an overlay, I will definitely like pharma over FMCG. So that is just my take on what I would prefer. But in terms of trade setup, once you see the correction, I think in FMCG is probably over. So you will see a pickup, which you're seeing sort of today. Some of the top gainers are FMCG stocks. Yeah, I just have the sense that from a portfolio perspective, I would prefer more pharma over FMCG.
Okay, and another sector that's been doing really well and seems to be nothing stopping it is the realty pack. Are you expecting an even further rally in the realty pack post-elections?
It looks like the realty stocks have held up. It would have been nice to see a decent, slightly deeper correction given the sharp run up. Doesn't seem to have happened yet. So if that does happen, it would be a even better opportunity to get into the realty cycle. But I don't think the cycle has ended. So that is definitely not the case. I was hoping though that we will see some kind of a pullback before they head higher. That's the only thing. Looking at things like the weekly momentum, for example, does have some kind of divergences and potential for weakness. But so far, when we look at the daily charts, we don't really see any reversal yet.